welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello everyone, welcome to our Broiler Chicken Show for beginning of September. We're just watching it load here on YouTube. Turns out YouTube, I guess YouTube's changed something here recently. Once again, if anything, I think this is a sad commentary on using all these free services. Not really free, but we are subject to their whims, and I suppose they could cancel us on a moment's notice if they feel like it. I kind of noticed now Twitter, Alan, basically every single tweet that I put out, he's like jamming in, spamming a whole bunch of nonsense advertising garbage. And you know that he clearly knows what's going on. So, but I guess that's a sad commentary if we do have to go into tough economic times. All the free services that you've seen out here over the past 10 years, they sort of lulled us into using. Now we're going to get advertised out the butt. Anyway, welcome to the 21st century. Certainly isn't the utopia that I had envisioned when I was growing up, coming out of the 20th century. Man, we were so optimistic for the 21st century. I tell you, this world sucks. Oh well. There's a nice happy note to start your broadcast on, eh? Woohoo! Actually, I am warming up. I saw another article about another big crypto Bitcoin sort of enthusiast is relocating to El Salvador, to Bitcoin City down there. And actually, it looks like it's growing quite a bit. Tell you, it's looking a hell of a lot more attractive than substitute drama teacher land here. God, you listen to the all the different social media posts about our country here in Canada. And, for the record, the good part about this is that, my cycle analysis works. I've been, from 2001 to 2018, that was a bull market for Canada. And man, the oligopolies, the 1%, man, did they ever juice this thing? And so much so that they've created such absolutely insane imbalances that the imbalances do have to get corrected at some point. I don't know how this is going to end for this country, but I mean, you see how the imbalances in Russia have ended. I mean, hell, I don't know whether that country's even going to be. It'll be really interesting to compare the after numbers of when the dust finally settles in Russia and what its economy looks like, even what the country looks like for that matter, versus what Russia looked like, say, in 2018, right at the very top of the market. Same thing with Australia, same thing with, like I said, Canada, probably also too, same thing with South Africa as a commodity supplier to the world. Really, really good macro lessons for everybody. I mean, please, everybody understand. What we're living through right now. Number one, it's actually stunningly cliche, not unexpected at all, and you will see the repeat of this behavior if you're relatively young and you're enthusiastic enough to the point where you are paying attention on a decades long basis. Maybe some of you will, maybe some of you won't. I mean, unfortunately, I caught the bug when I was in like high school back in the 1980s, and I just eat, live, and breathe the market. I love the market. It's just what I do. It's everything about my existence, it seems. And I love the fact that my dear wife, God rest your soul, sweetheart, she let me pursue that dream. to as much of her credit as possible. So the point being is like I was hell I even remember my old man getting all pissy about Trudeau Senior, which is so ironic. It's the same fucking family screwing our country over. 40 years later, it's the same goddamn anyway. Yeah, I just got to put my hands up there and say, I give up, I give up. Because if not, I got to go down a half an hour rant about how much I hate this guy and how he's destroyed our country 2 generations over. It's incredible. It's like this family is got a curse on our country. Anyway, and the West, poor old West. I don't know what it is about these people, but they got major hard on about killing people from Alberta, it seems. Anyway, I mean, we had a major disaster and up in the northern part of our country here this summer, and I'm sure you've probably all seen it, the forest fires up there in the Northwest Territories, and a place called Yellowknife. And it turns out, unfortunately, Yellowknife is actually directly north of Alberta. And, this Trudeau and substitute drama teacher idiot, their whole, anybody that lives east of Manitoba, they just don't appreciate the West. And it's half the reason why this country really shouldn't exist, because geographically, Canada doesn't make any sense at all. The only reason why the borders were drawn the way that they were was because the people that were here were freaked out when the U.S. Civil War ended and there was a massive army just sitting there picking its nose south of the border, and they had to do something quickly to try and sort of prevent the Americans from just steamrolling north. But anyway, that's a whole other conversation. But the people of Yellowknife, like the local mayor came out recently and she was like, we've been pleading with the people back east just to build roads. There are no roads for things like fire trucks to get to these fires. There's no roads up there. The federal government never bothered to invest any money to build any roads up there. They just, and their solution is, well, you just use bush pilots and to fly everything in and out. Well, unfortunately, you can't fly those planes when the sky is filled with smoke. Oh, I never thought of that. So, unfortunately, what's ending up happening here is that these stupid woke politicians, of course, running like Klaus's agenda and working for Greta, they're going to spin this as a function of, the whole climate change nonsense, when in reality, this is building way too much development, but not building the infrastructure to support the development. So you put a whole bunch of humans in, but you don't have any roads. Well, a little forest fire, that brush fire, could turn into an absolute disaster. And that's exactly what happened. I mean, it's pretty tragic. So, if you are watching from outside of the world, don't get sucked into the woke message that Canadian politicians are sending you about, like, oh, this is all climate change related. No, it's all about, you never built the infrastructure to support putting tens of thousands, hundreds of thousands of people living in these places without even things like fire trucks. I mean, it drives you crazy how screwed up this world is. Anyway, I digress. Okay, we're supposed to be talking about the market here. Sorry, I got off on a tangent there. And I suppose that's half the reason why we have so few viewers, is Brian has such a terrible opinion. Oh, look at that. I went all blurry. What went on with my camera? Camera, come back. You're supposed to autofocus. Guess the camera picked up on why is the camera out of focus? Focus. Where are you, camera? Oh. All right. Well, regardless of my camera, I'm not quite sure why it's not focused there, but let's head on over to the newsletter. This is sort of what we start. And really, I'd like to have this show actually focused around the newsletter and not Brian's crazy nonsense about his local government. As you can see from our breadth indicator, we had a nice little window there where we actually had the stock market and crypto pointing higher. And of course, crypto jumped up violently there. But unfortunately, about halfway through the week, things started to fall apart pretty dramatically. Econ wise, the economic data coming out of the United States right now is still fairly robust. I think that the the desire by the banksters to reflate the price of everything so that, of course, they can issue more bonds. They increase the size of the economy by printing a whole bunch of new money, which unfortunately, when you do that, creates price inflation. And that's just Milton Friedman, basic economics. Anybody who actually understands economics knew that this was coming 100 miles an hour at us. And I'm sure all of the banksters knew this as well. So the problem there is that all the working stiffs, the hundreds of millions of us around the world, maybe billions, how do we handle all these price increases? And typically what happens in economics is you have first what they call cost push. So that's all the prices of commodities, things like oil, lumber. You saw what lumber did there through the sickness. What a nonsense that all was. And you see that as soon as we're getting close to a new potential power exchange where maybe the right wing, or not even right wing, but the conservative sort of, let's try and keep the value of these currencies, instead of just hyperinflating them away like the banksters would love it to see happen. Soon as there is the threat that they might actually come back into power, and I still think that I'd be willing to bet money that Mr. Trump is going to somehow, January, I guess, 6th, 2025. We hear that Mr. Trump has been reelected president of the United States of America. I made that prediction 4 years ago, and I can't believe this 4 years has gone by now, eh? It's been such a shit show this past few years. Anyway, but they're going to try and do everything they possibly can, including, don't be surprised, over the next year, you mysteriously find out that, oh, we're all locked back in our cages again. And you're all supposed to wear masks, and you're not allowed to meet in groups because, heaven forbid, public assembly, which is supposed to be one of the rights of the Constitution of the United States. Keep in mind, I, as a Canadian, have to look at the United States with envy. You see what happens in totalitarian dictatorships and, bullshit, nonsense. Oh, yeah, you're a democratic nation. Fuck you. Parliamentary systems. You're really not. This idiot that was elected as a minority leader of all things. He's not even got a majority mandate from the population, but a minority leader can literally go into your bank account and freeze all your assets because you happen to drive a truck and you went to Ottawa to complain about the imprisonment and Klaus's Great Reset bullshit that's being rammed down our throats. So notice that they'll use something like sickness to try and get rid of that right to public assembly. And if anything, it's our job somehow, and thank God there's at least a shred of this constitutionality still left in this world. It's not much, but there's a shred, and Lord willing, the United States of America can hang in there, and this idea of constitutional societies can survive. But it'll be really interesting to see over the next year or so whether they dissolve this right to assembly by populations down in the States. But it wouldn't surprise me. I mean, that's just rhetoric. But anyway. So where was I going with all this? The workers getting screwed over by price inflation, which was caused by the banksters. Don't kid yourself, everyone. 2008, Ben Bernanke, quantitative easing. Remember this for the rest of your lives. That was the reason why we're living in this hyperinflation world now. And the worst part about it is, like, Canada never did have a housing crisis in 2008. Canada never had any business of doing quantitative easing. Why on earth was the Canadian Bank of Canada going and buying government bonds? Why was the Bank of Canada stimulating its economy? There was no business to it. So as a result, because there was no economic justification for all that money printing, the end result in my country is massive price hyperinflation. And like literally, I saw the other day, somebody said that since 2001, the average house price in Canada has tripled. Now, does that sound like normal historic norms? Does that sound like sustainable growth where the price of a house triples? And now you can understand why Brian is so damn bitter, because that's just not good economics. That's bullshit. And we've had this rammed down our throats because this is the Rothschilds' plan. It's the only way that they can continue their banking model, is that they must hyperinflate the economy. At the same time, too, though, the workers are like, hey, if you're going to go and raise the house of price, 3x, can I please see a little bit bump up in my wages? And basically what the Fed down in the States, and of course now all the central banks in unison around the world, are basically going, fuck you. I mean, that's what's happening here, folks. Don't kid yourself. So, the Fed's getting what it wants. It is slowing down the jobs market. It's slowing down the propensity for workers to consider leaving their current job for a better job somewhere else where maybe somebody can pay a little bit more money. They want to put the kibosh on that as quickly and efficiently as possible. Because the U.S. underlying economics are so strong, though, I actually don't think that that's going to translate into a nightmare scenario for the United States. The underlying fundamentals in a country like Canada are an absolute train wreck. And you could very easily see the situation that happened in the United States in 2008, 2009, 2010, 2011. That situation happened in countries like Russia, in countries like Canada, in countries like Australia, all the classic commodity or fear asset countries. And the irony of all of this is that theoretically commodity prices should be relatively high, but because of the money dilution, actually at the present, commodity prices are actually extremely low, which is really shocking. I mean, I could give you just a simple illustration. I mean, yeah, most of you watching this have probably heard me go on about this at length over the years, but just to show you just a really, really simple comparison. And really, I think, everybody should you should understand this, because at the very least, approach the market with your eyes wide open. Don't approach the market with your eyes wide shut. So, this would be sort of your crude oil price, right? And, let's even maybe look at it on like a monthly basis. And you say, well, Brian, I don't see a crash here. It looks like prices are pretty firm. In fact, if we look at it, and of course, one thing I really dislike about this TradingView site is that it conveniently cuts the data off so you can't see how bad the lie is. But basically, crude oil prices were nothing forever ago. But anyway, and then of course, what the hell is this? I mean, it only in the 21st century in the fucked up Ben Bernanke quantitative easing screwed up world we live in could you actually get this insanity in the marketplace. But someone might say, well, back in the George Bush days, there's crude oil, $10-20 an ounce or a barrel, and they ran it up to 100 and change. But this actually is not a real price chart. That's the crazy thing. You want to see what this looks like in reality. And I often put these images out, is look at it versus the money supply and what's the purchasing power of the currency. So you should be able to do this versus MT. Of course, everything has changed here. So I don't even know if this is going to work or not. There we go. So in reality, remember in 2008, this is where Ben Bernanke, did all the money printing, and there's actually the relative price of crude oil. We're not really right back up at old highs. We are a million miles away from those old highs, which is scary because this, I hate to say it, folks, but I hope you can see that this sure as hell's looking like some sort of like inverted head and shoulders down here now, eh? I mean, obviously it's sloppy, but I mean, just generally speaking, I mean, I suppose you have that, but that's what I'm seeing. And interesting how you don't even see this on this sort of regular price chart. So, and actually, I don't even remember. Do you guys remember in March of last year, did crude prices get up to $120 a barrel? I don't think so. It's kind of screwy. I'm not quite sure how that works. Anyway, if this inverted head and shoulders scenario plays out, good heavens, I don't even know where the hell this price could go. I suppose on a measured move basis. I don't even know how you'd even figure this out. But anyway, this is just one commodity. And that's basically right back up there. So in essence, coming right back up against these highs. But what the hell is this? This doesn't make any sense. I don't remember crude prices being back $130 there last year. What the hell's going on there? Oh, yeah, that's this one. Yeah. Oh, scratching my head a little bit on that one.
I remember that. I think food prices were pretty expensive last year.
$130 a barrel just last year? A year ago? I guess a year and a half ago? God, where the hell was I? Huh. Anyway, I guess it doesn't really matter. I guess the point I'm trying to make to you guys is that a lot of people are going to go, hey, crude prices are pretty high. But actually, this, relatively speaking, how much money they've diluted the system, crude prices are not really that high. So that's scary. Anyway, another conversation for another day. Did have an interesting conversation. There was somebody who posted in the lounge. I was looking at the crude oil commitments to traders reports, and I don't necessarily think that we're going to new highs on this crude here in the short term. I think we're just going to run up against trendline resistance here. And also too, I did it on my cell phone. An interesting chart on crude oil. I think I even tweeted it out. So this might be one of the reasons why the market's a little bit soft here right now, is we didn't actually include it in the write-up, but I could very easily see that where are we here? I think crude's going to take a serious run up into that I don't know, $9,500 barrel area. Put an interesting chart out. Where was it? Actually, I did it as a reply. It's kind of weird. If you reply to somebody, it's going to be hard for me to find this in the future. I like personally just using this Twitter as a sort of repository of my ideas. And then I like to go back and just review what I've said over time. Although I don't think Alan wants us using social media and stuff in this way. And most of the social media people that I talked to in the past, they don't really like me using it this way. I'm actually using social media completely wrong. But, Brian, I always do everything weird. So here was the crude oil commitments to traders report that I did. I thought this was fascinating. We could talk about that if we have enough time, although I talk way too much about nonsense about Substitute drama teachers and not enough about the market. Where the hell did I put that original image? Where is it? Oh, and by the way, we're going to have our raffle here for a seat for the fall term. If anything, this is great odds for all of you guys who are in the raffle and who are active participants. You can see like, I only got about 20 or 30 people here watching this video today. The odds of you winning this this seat are actually pretty good. Where the hell did I put that damn image? Because it was right here. It was in reply to this guy. So something's messy there. Where did I put that? I don't want to see all this crap. I didn't really agree with this guy's analysis, if you could tell. But I did put a really cool chart of crude, but I don't know how to do this. It was a reply to this. So where the hell is that? That's this, right? I mean, I don't want to go through all this crap. I just want to show you the chart because it was off my cell phone. But yeah, there it is. Okay, so this is what I actually think is going to happen with the crude. And this is a fantastic analogy of chaos theory. Notice how this fog and bomb 2.618 lines up nicely with that 38.2. So I think that's sort of your bottom end of your rally window, 89, probably call it 90 bucks. We also have that primary trend line off the top that I was showing you. Where the hell I put that? That's this trend line there. So that trend line is this line here. And we have our simple rule at TRI, and it says I said the same thing in the Bitcoin summary that I did today. You know, I don't necessarily get a buy signal until I actually get market structure on the other side of this trend line. So right now, this is and I would imagine there are a lot of people out in the world that are looking at this trend line, and they said, if we get a tag of that trend line, I'm taking profits, or if we get a tag of that trend line, I'm shorting. And then you even have other people look at this and go, well, there's the trend line. I'm not going to do anything right here until we get to the trend line because it looks like the market's going there. So it'd be stupid for me to sell right here. So this is a really, really good lesson for everybody watching this on, is it the actual trend line itself that stops the market? Or is it one of these kind of things where all the humans see the trend line, and so as a result, they make a decision subconsciously that they're not going to do anything until the trend line is traded to. And so as a result, the market literally just gets sucked right up to the trend line because everybody's expecting that to happen, and that's what's basically going to happen. And the worst part about it, right, is the market will pop its head through the trend line, and a lot of people will call that a breakout, and they'll get suckered in. And there's tons of examples that I've shown over the years where the market trades back to the trend line, then just walks its way down the other side of the trend line. And anybody who just bought the first blush tag of the trend line, they regret it. And in fact, this might be a really good topic for our next week's short. I don't know whether you guys saw, but Chris and I have embarked upon a new project that actually I'm pretty stoked about. I really like the this. We're going to put together some shorts that have very structured themes. So I don't know whether I can show you this here, but yeah. So we've started to do this. I did one on divergence, very structured. So like, hey, trading tips with Brian, that kind of thing, and then we had one last week on the US dollar and using it as a sentiment proxy. So I'm really excited about the direction that these are going. How ironic, no views at all. And yet I would do yourself a favor and I would just like bookmark all of these shorts. You should be able to put Like what I plan to do is like literally we have 36 different modules in the education program, and every single module has one of these sort of like little short kind of ideas. And of course, divergence is a major component to our sort of three-step setup. And how do you interpret indicator confirmation in that process of hunting trades? So this should become just an absolutely incredible resource going forward. So as I said there, and Chris, maybe you can make note of it while I'm blabbing away here. Maybe we'll do a little bit more work on it through the week. But trend line tags are not new trade locations. If anything, trend line tags are where you should be taking profits. And then if you do want to actually take a trade along that path, you got to wait for some sort of bullish structure on the other side of it. And I hate to say it, but Bitcoin was a really, really good example of this just over the past month or two, where we had a trend line break. It was off the daily chart. On that silly ETF nonsense. So we had this trend line break here. Market shot up. Now, if you're a lower time frame trader, great. You can maybe hunt your market structure on the other side of this trend line. We went up, we went down, we went up, and then breakout. But frankly speaking, I think most of the public that watches these videos, you're not lower time frame traders. Really, the rule here is, and this rule is to help keep you out of trouble. And I would strongly suggest all of you obey this rule from now on, right? If this is actually a real buy signal, what we need to see is a big fat W on the other side of this trend line. Something like this. And you notice that we went straight up, no structure here, and we had to come straight back down. And frankly speaking, I don't even know if we're even done this coming straight back down now. And now you can see we have this very solid downtrend line working off of here. Again, you can't really get bullish until we break that trend line and then we actually put in some sort of W. And notice my forecast here, if we actually did break this, is there is no W. This is just straight up, down, making lower lows and making higher highs. I think we're going to make a megaphone here. But as you can see, and we'll get to this in a bit when we do the Bitcoin summary, we can't even do this. We just broke to new lows here. So I don't even know if this scenario is even on the table anymore. But what I wanted to mention to you guys, and it's super important, and I think it's super valuable, and you ought to just make, I mean, it's tough to take a screenshot of that because there's not really anything screenshotable. But as I just said there a moment ago, if this thing really was a bull and this thing was a buy, you would have seen the market break the trend line, consolidate, and then give us a W to frame risk against and give us a trade. And it just didn't happen. So that's the same conversation as what I see happening in the crude here. Is I think, yeah, here's W's down here. And if you wanted to play this on anticipating a move back up to things like Cullen's pump chaser zone, WD Gans 50% rule, first stop target. That's my buddy Ray Burchett from IDT. Play this W Foggenbaum moves up into 2.618. Great. But that's a profit taking location. That's not a new trade location. And what I'm worried about, and the whole reason why I responded to this guy, is the public seems to be getting uber bullish of crude oil here. And I don't know. I don't think so. And then to add insult to injury, and this is a really good lesson for you too. This is another module in our education program. And by all means, if you can, this is a bit more advanced. This is like level 2. And I got to go find the notifications. But in essence, this and then there was a guy back, through the sickness crisis, and he was barking about the COT reports. And I looked at his analysis. He called himself the bond king, and he was uber bullish of bonds right at the top of the market, which was just dumb as dumb gets. In fact, actually, I'm seeing exactly the same thing. God, now I got about 5 different thoughts going through my head. Sorry, everybody. Let's finish this thought, and then I'll get to that other thought. So, this guy said here, "Oh boy, huge bullish structure, rah rah rah, bull bull bull," and then he made reference to things like commitments of traders reports. Now, remember, I was an old commodities broker, so I used to like live and breathe these damn things every day. And this is the commitments of traders report for crude oil. The green up here, these are the large specs or the institutions. And the teal down here, these are the commercials or what are called the hedgers. And the commodities industry, the whole industry is built to support these people down here. And I don't think people in the public really understand that. I mean, the commodities industry is not built to support JP Morgan or Goldman Sachs. They're just the middleman. The industry is built to support these people here. And these people here, the commercials or hedgers, they actually want to, and it's very complicated. And like I said, we go into it in detail in our education program, but just simply put, they want to change the risk profile for somebody that either grows or digs a commodity out of the ground or produces a commodity, or somebody who uses a commodity, in this case, like say, gasoline manufacturers or heating oil manufacturers. They want to change the risk profile from price risk, i.e., I don't know where the hell the damn price of the commodity is, to what's called basis risk, which is the difference between the futures price, whatever price that you sold in the future, versus the spot price. And those two futures, the spread between the futures price and the spot price is what's called basis risk. It is the basis model. So the point being that, believe it or not, the commercials or hedgers, they actually by definition want to be on the wrong side of the market, because their business model is specifically to remove price risk. So and really whoever's buying their product is the person who's most at risk. So if you're in a rising commodity market, who's at risk? Well, the people who use the commodity. So they're going to be using the hedgers because they need to hedge that price risk. Conversely, if prices are falling, like let's say for corn, who's at risk? Well, the farmer's at risk because they're going to get a lot less money. So they use the hedgers. So the point being that the hedgers are always on the wrong side of the market and they don't care. Their job is not to make money speculating on the price. Their job is to change price risk change risk from price risk to basis risk. And I'm going to leave the explanation at that. If you want a detailed explanation, take our course and we go into lots of illustrations of how that works. But the point here is that the commercials are always going to take the wrong side of the trade. That's just what they do. So you can clearly see here, the commercials, beautiful double bottom in their prices, or in their positions, beg your pardon. That should be, by definition, bearish of the commodity. Now, the large specs, the institutional players, they facilitate the trade for the commercials. So the large specs, the institutions, they are the Goldman Sachs, the JP Morgans, the people are on the floor of the exchange, market makers, blah, blah, blah. So you can see that they literally take the exact opposite position. And by definition, if the commercials are always expecting to be wrong and always expecting to be on the wrong side of the market, then by definition, the large specs are always going to be on the right side of the market. And this is what comes back to, the smart money always makes money. The 1%, they always get rich. The way that this relationship is built, the large specs have no choice but to make money. The commercials do the research. They want to make sure that whatever hedging product they promote, it's, whoever's at most risk is going to be buying their product or selling. So they have to be right. So they are actually considered the smart money in this business. And the large specs, Goldman Sachs, Merrill Lynch's, Joey Diamonds, They just have no choice. They have to facilitate the trade for the commercials, and they are forced to be on the right side of the market. And you can see these are basically exact opposite. So this trend in large specs is actually what you should see price actually trending. And what's interesting about this is that if you actually look at the price, you can see as soon as the large specs really got sort of settled in and the commercials got settled in, what happened to price? You can see, oh, big fat M top. And we've been trending our way lower here. The only way that this reverses is if we get a market structure signal from both the commercials, a big fat M here, which breaks this uptrend, which I don't see, by the way. This was a new high in commercials here, and this was a new low in the large specs here. So we need to see this market rally back up against the highs, then roll over and make a new low, and then you have an M in the commercials, which implies that we have a new sort of bias out of the commercials, kind of like you see here. You see that beautiful W, and then notice these M's, right? Nice rolling M's, beautiful M. Look at these M's. Oh my goodness. Here, look at this beautiful example. M comes in, M comes in. What does price do? Boom, big bull run. So, and interesting, you can see the W's coming in here on the large specs. What comes in? Big bull run. M comes in here, W comes in, one comes next, bear run. I mean, this is incredibly straightforward. And yet you would be surprised how many people in the marketplace don't understand this. And, this guy that I was barking at, this guy here, he's clearly misinterpreting the data here. And he's like, oh, this is uber bullish. And I'm like, that's not uber bullish. If anything, what I could clearly see that the commercials, they're still expecting price to fall here. And the large specs, their positions, Joey Diamonds, JP Morgan's, all that, right? They're positioned to actually see price continue to fall here. So anyway, rant. Where was I going with all that? I guess the point that I would just make here is we're no longer actually in a commodity friendly market. So this data that I'm seeing out of the commodities here actually makes perfect sense. I mean, if they go through another big whack of money printing, maybe they create another sickness, which means that they've got to inject a whole bunch of more, fear-driven stimulus in our economy, which then, jacks up this funny relationship that we have with price and what is real versus what's fugazi. They might in mysteriously create this crisis that jacks price up, but is it actually going up in reality? Or is this just a function of more money printing? That's a good question. And actually, there was a gentleman who we kind of beat up on him a little bit. You can always tell the new people to the market because they come in and they make the most outlandish statements. And there was this one gentleman, Sharky had pointed him out. I don't know. I didn't know him from Adam. But when we go through this is the crypto total market cap. When we go through these absolutely insane bull markets and stuff, the bulls just come out of the woodwork. It's remarkable. And so, we were actually just starting to climb up here. And anybody that works with TRI knows that, well, we probably ought to do 38.2 retracements. Then we ought to figure out some sort of bottom. And where are we relative to the halving event? And how does this market usually act through these halving events? And more importantly, the post sort of face rip kind of environment. And he came out with you can see this market cap here was like 3 trillion. And he came out with just an absolutely insane upside target for price just based off of what we were doing through here. And it was kind of like, that's a bit amateur. And it turns out tongue in cheek, I kind of said, where was this guy who's promising a 7 trillion market cap kind of idea? Chuckle. And then he comes back and he says, well, Brian, I joined your community, so quit bitching at me. Which I thought that was great. So now I'm not allowed to bitch at him. But my response to him was, all right, so good to hear that you're one of us now, which means, you can see look at that, Alan. He's getting all pissed off at me. Anyway, so what I said to him was, all right, so we call ourselves the rational investor, right? So we are good rational analysts, which means we want to juxtapose good technical analysis with good fundamental analysis. So that means that if you are part of our community now, you should know how you actually should behave. And you're not allowed to make these crazy, outlandish upside predictions. That's just not good business. In fact, you do that kind of stuff in the stock market, and it's one of the, it's one of the reasons why this Allen guy, I dislike him so much, is because he knows full well that he can't say anything in the stock market. He tried to say stuff and tried to manipulate markets in the past, and the SEC and stuff like that basically tried to put him out of business. And he sits there and bitches and complain that it's some big conspiracy. But hey, people are investing their hard-earned money in your stock or in the stock market and stuff like that. So you can't do double talk. You can't, well, anyway, I'm not going to open up that can of worms. The point is, he went and did the bullshit in Doge. And frankly speaking, if that was the stock market and he went on Saturday Night Live because his stock was going zooming up, notice he didn't go on Saturday Night Live and talk about Tesla stock when it was ripping higher. He kept damn quiet about that because he already had his hand slapped once by regulators over that kind of outlandish behavior. And frankly speaking, I think Allen's culpable. And if crypto was a regulated industry, I think he would have been sued over what happened over that Dogecoin and it ripping up higher there and him not saying anything. Anyway, that's another conversation for another day. But the point here is that we're supposed to be emissaries of good behavior. So, Mr. Ship Captain, from now on, right? I'd love for you to say hi when you're on the site if you're watching these videos and stuff. But now I expect big things from you. I think he had a pretty good head on his shoulders. And I think, you don't get to be ship captain because you're a dummy. I mean, sure, I think he's probably very intelligent, but no more of these like moonshot calls. And when we are moving up top, in fact, actually, that divergence little short I did, everybody should be hunting for divergence. That's your clue that maybe the bull market's coming to an end if you happen to have a bearish divergence forming. I don't necessarily think that we have any divergence here. I mean, we didn't go to new highs here just recently on the total, so that's not problematic yet. But, we did see that in Bitcoin. Actually, maybe that's a good sort of segue. Notice, we did move to new highs here just in this July period on Bitcoin. And I actually did a video and a whole lengthy lecture on this with the people from Coinigy. Our RSI study was nowhere near going to new highs through that event. Huge warning sign. Then, of course, this is a MACD indicator, but it's not a typical MACD indicator that the public sees. This is the histogram. The actual indicator that the public sees is going to actually look something like that. The crossovers, use the information at your, best discretion. I've found that MACD does spit up a lot of signals. So I don't really like to take all of the crosses per se, but I do find a lot of value in the relationship between the MACD, which is nothing more than a relationship of two moving averages, and a moving average of that MACD. And that is what this image is, the histogram. And to me, this is incredibly valuable. It gives me a visual representation of that momentum picture. And as you can see, In fact, well, actually, I think probably the best way to just talk about this with you is to show you the tweet that I put out when I was doing the Coinage show a week or two ago. When we see a bearish divergence, especially on something like a weekly price chart, oh boy. When we see bearish divergence, and this is confirmed as well, I won't go into the difference between confirmed and potential right here now. But where are we? Where's that pretty picture? There it is. If we see a situation where you have a rising price but lower highs in the MACD histogram, and this is an even worse one because there's the high on the move. And as you saw from that image I just showed you on the Bitcoin, this has now confirmed. So that high to that high and the breakthrough here, that's an even bigger divergence because that push was to new highs, right? So, oh my goodness. As my old, so I don't even know what restaurant that guy even was promoting, but oh my goodness, oh my damn, oh my goodness. There goes the ham. Wonder if any of you guys even have a remote idea of what the hell I'm singing there. I know half the time when I sing songs to Chris, he's like, I have no idea what the hell you're singing to me, Brian. Remember, you're a white guy. No, Chris wouldn't say that. He's so
but yeah.
there he is. So he will chime in for this. Yeah, Brian. I mean, no offense, but don't quit your day job. Anyway, more divergence. Oh, goodness. What a train wreck. So if you're a bull, you got no choice. You just got to leave this shit alone, which is such a shame because the crypto kids, they get so enthusiastic. I suppose this would be a good dovetail. Why don't we just head right into this now? So this week's summary. Let's see which page is it. I guess over here.
FYI, Brian, we have about an hour left.
All right. I don't know whether anybody's getting any value out of this. I hope you guys are getting some value out of this. All right. So recently, every Sunday before we do these shows, I do up a weekly, daily, and 4-hour chart of the Bitcoin. And I think right now you could argue that the market is range bound. This was Mr. Fink's sort of FU low. Remember the end of June, I went on vacation. We were making lower highs and lower lows. And then all of a sudden, like literally the last week of June, Mr. Fink comes out and says, oh, I want an ETF. I want an ETF. Really absolutely nothing to do with the actual fundamental value of a Bitcoin, everything to do with sentiment. And what I actually find kind of distressing, a little bit sad about places like CNBC is, in a weird sort of way, I think CNBC is like a really well manicured, well polished hooker. And in a weird sort of way, they bring on Fink, who basically has a vested interest, right? I'm sure he owns a huge chunk of whatever company that owns CNBC now. And he probably was like, you know what? I bet you there's a lot of people that are seeing these M's, seeing the failure through moving averages. Let's see if we can just run some weak hands here, run the tops here. And then we went after the stops and all that kind of conversation. But we're not really doing anything here. And there's certainly no comment about the fundamental value of Bitcoins here. This is all sentiment driven. So he goes on CNBC and he says, I want an ETF. I want an ETF. And in one candle, they just launch this thing right up and break the old highs. And then he absolutely just disappears. And now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to basically do nothing more than take back his 1 week of circle jerk. Because that's literally what this has turned out to be. which sad commentary on capitalism. It's probably a really good commentary on if you actually understand how to play this game. You got no business buying Bitcoins up here. This is a mugs game. You're just asking for trouble. And the worst part about it is there's a ton of people that are coming into this crypto space right now who are newly minted crypto experts. I mean, it's remarkable how through this whole sickness, there's a whole sort of slew of brand new experts that have just sort of turned up on YouTube, experts in everything. That you've never even heard of these people before. And I hate to say it, most of them are from like overseas. There's like they've newly come to this continent. It's like, yeah. And then of course you say stuff like that, and people accuse you of being racist and stuff. But I would just simply say that anybody who actually did understand what they were doing in the marketplace, buy when it snows, sell when it goes. You had no business buying up here. That was just stupidity. So anyway, all the stupid people are being punished right now. I guess that's not a very karmically positive way. I should say, hey, even the stupid people need love. So here I am. I'll give you a big hug, you stupid people. I mean, it's borderline between, hey, I'm being empathetic to being, you people deserve to lose your money because you're just making really bad investment decisions. You're not following any process. You don't really know what you're doing. Maybe, I don't know, maybe do something really crazy like take an education program that'll teach you the process. But of course, I don't want to get into the shill. So, the message on this weekly price chart. We came down into Mr. Fink's candle body lows for trade location. That was also a 38.2 fib retracement level. And if we look at the lower time frame charts, you see there were a number of reasons to look for some sort of pivot down here. The market did have a nice rally and literally ran right into moving average resistance and just got bitch slapped back down away from that moving average resistance. It's about the only way I can really describe this is that, had you seen this rally and seen all of these moving averages up here, you should have been like, kind of like the whole thesis with this isn't a buy until we get a W on the other side of trend lines. This can't be a buy until we actually clear through these moving averages now and start putting in structure on the other side. So notice, down here, this event here, clearing through these moving averages, that left an open window for price to rally up into the next moving average. And then you notice that the price actually plays ping pong between the moving averages. And then once we get up through the top there, okay, now we're into open air. And then notice we pull back and use moving average as support. All right, we can push higher into open air. But if you have the moving averages above you, and really good example there as well as here, look at this, 13 EMA on its own, huge resistance, and then huge resistance again. The fact that all three moving averages were sitting in there, that was going to be a brick wall. So anyway, comment here, recent rally into moving average brick wall. Yeah, not a big surprise. The question here now, and this is an old time-tested rule that I have, and I've shown you guys this before. I'll show it to you again, just for illustration purposes. Let's see, where's the best place to do this? Why don't we go over to our funny crude oil chart that we had on here? Let's go SPY. Yeah, we'll just do the spiders. And we'll throw on our weekly price chart and throw on our moving averages. So I have a nice little default with all my studies that I like to follow. There they are. And let's look at the 13 EMA and the 30 SMA. And we'll get rid of everything else for the purpose of this conversation. So this one moving average system, it just works so beautifully to keep you out of trouble. So you can, I mean, and you can go back over time. It's absolutely incredible. So you can see this. In fact, actually, I did a blog post back when blogs were brand new about this moving average cross relationship. And look how the moving average crossed, and it kept you out of the stock market through that whole 2007, 2008 bullshit. So if you just followed this one simple system, you can see had a bullish cross here, so it got you long in September 2006, and then it crossed bearish right there. Never did cross bearish there, crossed bearish there, and it had you short through that whole 2007 meltdown. What do you think, Chris? This should probably be another really good example of a short we should do, eh? So that's two short topics that maybe you could add. Did you write down that other one? What was that other one? Oh, the commitments to traders one? I don't know. Maybe you did, maybe you didn't. Chris is sort of my keep you honest indicator, Brian.
Can definitely write it down, and I think that other one was trend lines.
Yeah. Okay. So there you go. Thank you, sir. Okay. So you can see after the crisis, it got you back long, and it actually got you short here. And then notice it crossed back long here, basically at the same level. That's the one reason why I love this. And then let's see what happened here. Was that a half decent buy signal? Well, that got you long to go all the way up into here. Then the moving averages crossed here, and then they crossed back bullish here. And watch this one. Look at this signal. This is crazy. So you went long here, and you didn't get a moving average cross bearish until way up here. That was one trade. Stayed bull the whole damn way. Isn't that incredible? So, is it worth your while to pay attention to this 13 EMA, 30 SMA relationship on the weekly chart? Yes, I think so. So, interestingly enough, how it actually crossed bullishly right there. So, stock market is still in very bullish mode. This is kind of one reason why I don't think you're going to get a crash in the United States of America. That looks way, way too bullish. Might be interesting just to look at like something like Canada. Let's see what, Can you see how Canada, it actually flashed a sell here, and it flashed a buy here, and it just flashed a sell here. Now let's see whether this can W out and get back on the bull side. But as it stands right now, actually it's in a bearish stance. So that's kind of interesting, considering all my commentary about substitute drama teachers. And look at this signal there. I mean, damn. I mean, you're here to make money from trading. I mean, is that worth paying attention to? It's interesting how it would have got you out right here. So you would have avoided all of that shit. And then you basically would have pretty much just gone and bought the market back right in here, or basically where you sold, scratch trade. And then that would have had you long that whole way up. So where am I going with all this? If we look at Bitcoin, you can see this is getting a little bit precarious. Now we haven't crossed bearish yet. So notice here was a big sell signal. And this is sort of, like our 4-year cycles. So avoided a lot of trouble there. We got the bullish signal last fall and actually into the winter, right? Remember that W bottom, buy when it snows. And you can see this has basically been the hallmark of our bull market. It hasn't crossed yet. So everybody go, phew. But you can see the writings on the walls. That's looking a little dangerous there, folks. And, you've missed the buy, right? The buy was way over here, not over here. If anything, what we need to see is, can we please see some sort of consolidation and get this fast moving average ticking back up and moving away from this? Because if these cross bearish, that turns out to be a new, at the very least, maybe I better not do any buying here. Just cool your jets. On top of the fact that we have all these momentum indicators, things like MACD histograms and RSI also spitting out maybe ought to cool your jets kind of signals. So the message out of the tweet was just simply, should these moving averages cross bearish, we will know that the 23 rally is done for now. It hasn't yet, but I will say we got nastily rejected off of that move up there. And now, and all of you should be able to recite this in your sleep, but what is this? One candle here. And what do it, let's see, maybe we'll leave this open for the YouTube audience. What do we call this one candle? I mean, I don't know how long the delay is, but that's a very, very important type of candle. And you can see where we are here. Now, maybe I'll head out with Liam, and by the time I come back, some white knight has come in and ramped this up. But keep in mind, this low here on this weekly candle, 25,333, that's lower than last week's candle, 25,350. So do you know what we call this type of candle? Hint, hint, hint. It's not bullish. There is another one right here. Do you see that? It's basically the same thing. Although I can't really get the arrow to go on it. It's called a hi, everyone. No, it's not called a hi, everyone. Hey, there's Eddie. Oh, B. Hello, B. B says, when housing market in Canada gonna tank? Well, B, I actually was telling people it should have tanked 5 years ago. So I don't know how long these assholes are going to keep this fugazi going. Unfortunately, I think that something like the housing market is political. So I don't think you see any tank. I don't think you see any change in direction until we get this idiot out of Ottawa. So, and then heaven forbid he actually gets reelected, which I don't think he's got a hope in hell of happening. But you never know in this fucked up world. In simplest terms, I don't think that the Canadian housing market turns until the banksters, who are basically in the hip pocket of the Liberal Party, or maybe the Liberal Party's in the hip pocket of the banksters. I don't know, one of the two. I don't think that this whole con job ends until that model is broken. So remember, in the United States, when did the housing market actually collapse? Was there some sort of political event that happened that actually triggered the meltdown in the US market? Hint, hint, hint. If I ask a question like that, the answer is actually extremely obvious. B, are you still here? Anyway, I noticed B in the Zoom call here asked a question about when the Canadian housing market's going to break. So, B, answer me that. What was the political event that actually caused the U.S. housing market to actually break in 2007? All right, so let's get back to this question here. I'll leave that for B to figure out on his own, or her own, whoever that is. What do we call these type of candles here? Let's see. Everybody over. Hey, Constantine. I'm Constantine, so damn smart. Shooting star. And that is a very bearish candle. And notice they just did it again with this pump up. And what do we call all these people that actually got sucked into the bullish story here over the past week? What do we call all of these people? I give them a very specific name. Anybody know what I typically call these people? In shooting stars, you can always correlate shooting star with this concept. What do we call these people? Excellent, Eddie. You are so smart. Oh, Josh. I swear, 5 years, geez, how long have I known you? 5, 10 years. You still make me smile every day. And Eddie too. God, I sure hope please, Jojo, keep these people in my life. I absolutely love having them in my life. Please, God, maybe JoJo's out of the equation now. I gotta talk to the big guy directly. I don't know. Joby, God, I missed you, Joby. James, God, I missed you, James. Those are actually TRIers. But anyway, so just like these people up here, we now have a whole bunch of new trapped bulls. And does it make sense that any kind of counter trend rally up into this wick now, these trapped bulls are going to be like, oh God, get me the hell out of here. I'll never buy this thing again. Can you see them? They are trapped. And like Joshua said there, they're trapped couch surfers. If they're lucky, they're sleeping on the couch. If they're unlucky, they've actually been sent to sleep out in the doghouse. And keep in mind, there's a whole bunch of trapped bulls up here that would love to get released. And man, they are so trapped in there. I don't know what the hell they're going to do. They're going to be in there probably for years. Anyway, so you can see this stuff pretty much writes itself. So not only do we have the moving averages acting as resistance now, but we have this big old wick that's got a whole bunch of trapped bulls in it. And those bulls would love nothing else than to get released, right? So if anything, that's a really good image. I might even tweet that out later on. We could probably also do a short on trap bulls. So I'll actually, I was just there talking to you, weren't you? I'm going to give you that as that's another short topic we could easily do a video up on, Chris, if you're so inclined, if you could add that to the list. Members lounge, I'll throw that in there too, because that's a good image for all your diaries. And it's aside from Brian's political rhetoric, aside from the fact that Brian can't sing to save his soul, aside from the fact that Brian has a terrible joke book, aside from the fact that for some reason Brian absolutely hates substitute drama teachers, why I don't know. The substitute drama teacher union is probably gonna start harassing me for harassment. Look at it. I don't have anything against the profession of substitute drama teachers. It's just one particular substitute drama teacher is a total dickhead. But anyway, this is why you watch these videos. You don't watch these for my jokes, which are terrible. You don't watch these for my singing. You don't watch these for my political rhetoric. This is exactly why you watch this video. So you have to learn from this, people. And that's the whole damn reason why I'm doing this, is you've got to learn from this. So anyway, really good analogy of a whole bunch of trap bulls. And what's scary now is that how does this shooting star actually confirm the bearish signal? And you probably remember from this summer, I even did this. When this shooting star happened, I said that you can do a measured move. Because quite literally, this is almost like an AB move. That shooting star distance, unfortunately, you can't see it. Anyway, let's see. Maybe we can do it like this. Maybe you can see that now. That distance right there. If we lose this low, then all you do is you just replicate this range. This is, to all intents and purposes, a trading range. So you can replicate it, and that now becomes a perfectly legitimate downside objective right there. And you can see, boom. And notice, look how they rally here, down here below this objective. Look where we actually stopped the rally. Why? Because this is actually where probably a lot of guys actually wanted to square up positions. So you can do the same thing here. That high down to that low. And we won't know that this has actually been confirmed as a shooting star until we actually trade through that low. So 25,333, I would definitely write that down. I like using stamp. If you use a different market, then by all means, make reference to whatever this shooting stars candle low is. That's a very important level. If we fail through there, then that is another one of these measured move type scenarios. So, as you can probably tell, we had a whole bunch of indicator confirmation. And what I really love, which was super cool, was, if people are asking about trade location. Turns out that this actually was a very cliche. Whoops, not that one. Actually, here, let's just do this one. There, boom. Actually, we never. Hold on, that interesting. I guess it must have been off of this range. There. Oh, okay. Now I'm scratching my head a little bit here. We never did get up to that 38.2, did we? No. So I guess the absolute best is we did that rally. Interesting. So this looks to me like Colin's dump chaser zone. Where's dump chaser? There he is. So do we have trade location? Interestingly enough, Colin, it's a gentleman who is, I think he's over on the Hero Exchange right now. And actually, he does really cool podcasts and stuff with a group of traders, crypto traders. And actually, they even asked me, I think, to try and come on their show. I think that's these guys, if I'm not mistaken. Hero Labs. Somebody asked if I could. Where are we here? Yeah. So I had reached out. That is Colin. He's a dude. Nice troll face now. That used to be his real face. So actually, he took it out and he put a troll face. That's hilarious. Anyway, I was talking with their community in a weird way, somewhere back in all of this, of course. But they had said, "Hey, when you gonna come back on our show?" And I was like, "Just name a time. I'll be more than happy to learn the goddamn process." Of course, Brian's a bit salty, so my apologies for all my salt and vinegar. Anyway, somewhere in here, I was chatting with them. Blockworks, I think they call themselves. I thought that was the name of it. I can't find it. That's too bad. There's Eddie. Hey, there's MK. MK actually used to be my old trading partner when I was at my prop firm. That's super cool that he's still following me. That's awesome. He is a great fisherman from Minnesota. Oh, isn't that weird? I can't find it. Anyway, somebody was PMing me. I would have thought it would have been in this notifications. I don't know how to use Alan's platform now. I think in a weird sort of way, I think Alan's kind of trying to tell anybody who doesn't want to pay his fee to get the hell off his platform. I have to figure out a new social media platform to use. Anyway, so these guys were kind of in one of our previous episodes. I was on one of them, their shows. In fact, actually, it might have been a reply to this. Was this it? No, darn. Anyway, I'm wasting time. So yeah, I mean, I'd love to have Colin come on our Wednesday shows that I'm doing with Coinigy show people these days. That would be kind of fun. And they suggested maybe I come on one of their shows, but anyway, I can't find the darn tweet to show you that. So kind of stupid on my part. But anyway. Okay, so where are we? Let's get back on track here if I can somehow. We talked a little bit about the weekly chart. Of course, there's my warning to you. If you are going to take trendline breaks for trades, try and find W's on the other side of the trendline breaks. If they don't come in, be careful. And I think that's exactly what happened here. We had a very quick little W that came in. This, I thought, was a really, really good lesson in why I teach how important 38.2 fibs are. So this is now off the daily chart. If I change this fib study to just the 38.2, hopefully you can see this. Where's the little drawing tool thing? Oh, there it is. So if I go 38.2, right there it is. Look where we stopped there. I mean, just absolutely textbook. So this is why I like to teach that we use the 38.2 at any given point in time, any type of price range, anywhere, you should expect 38.2 bounces. So this rally off the bottom, it was a very cute little diamond. And in fact, off the lower time frame charts, the diamond was very well pronounced. And I actually think, now we're talking the 4-hour charts. We're not talking to the investors. This is not a conversation investors you have any business in even listening to. This is more, now I'm a swing trader, I'm a day trader, all that kind of fun stuff. So for the swing trader, I think there was an absolute gift of a trade setup here a week or so ago on candle body lows for trade location, reload zones, the diamond pattern. Then I might argue that more conservative, more simple trade setups that I think anybody if you want to take our level 1 program, we try and get you to leave the program with this basic understanding. Trade location, bottom end of the range, indicator confirmation. I think we had a bunch of divs that were starting to show up down here. We had a couple confirmed divs off of here. And then price structure, nice W. I'm going to try and get at least a 2-to-1 risk reward off of my trade. So if I bought that W and I was going to risk to a break of those lows, right? That W down, up, down, breakout, or even if you had bought this W, same logic against that low, down, up, down, breakout, and you would have actually gone long there. 2-to-1s, as I had shown you there a second ago, off of this W, that was in this area, 2.618. Off of this W, that's up in here. Ring the register. At least, at the very least, maybe sell half of the position and then move your stop to scratch on remaining. And then maybe you might have at, say, 3-to-1, depending on your plan, or maybe Foggenbaum levels, maybe let them have a little bit more. Or maybe you say, you know what, I'm going to let them have some more on 38.2 tags. Now we're talking like 4 or 5-to-1 risk rewards. Point here is for the swing trader, it was the most beautiful trade. And I even tweeted out basically the moment it happened, the diamond was resolved on this big pop here. This big pop, I don't actually think had anything to do with Bitcoin at all. Of course, everybody in the Bitcoin space blamed it on the SEC and the BlackRock Capital case, or not BlackRock, Grayscale case, and how the SEC lost another case. But if you looked across the board, the whole risk market just launched higher. Everything right across the board, stocks, bonds, currencies, commodities, Bitcoin, everything launched. And it was on the release of inflation data that showed that maybe the Fed doesn't need to raise rates and maybe even could even consider lowering rates. The whole rally across the risk market started when the 2-year bond started to take off, because the 2-year bond is basically the market's way of judging short-term interest rates. If people are worried, and we can show you that, that happened over here. And you can see into Friday was this Bitcoin sell-off that we saw happen on Friday. Notice, look at my mouse. So as we're coming through here, notice that sell-off, and actually you can see it in the broader risk market, that sell-off started, you can see right in this area here. So stocks really didn't give back, but you can see the Dow put in an M top. Looks like the NASDAQ M top. The one market actually that's relatively strong here, there's a bit of a head scratcher, is the Russell 2000. But you can see this whole market rally. If I move my mouse out, I'm really zooming out now so you can try and see the whole damn thing. So there's that Bitcoin rally. Notice, look at what gold did. Gold jumped up at exactly the same time. Look how silver jumped up. Look how crude oil jumped up. Right? We can even zoom out on that Bitcoin rally. Oh, look how the euro took off here. Look how the US dollar came down. If we look at the commodity currencies on that Bitcoin rally, look how the Swiss franc took off. Look how the Canadian dollar rallied. Look how the Australian dollar rallied. And then, like I said, in the stock market, at exact same moment, S&Ps took off, Dow took off, NASDAQ took off, Russell 2000 took off. And I think that the whole damn rally was predicated on this one market right down here. This is the US 2-year US Treasury bond. And that whole risk on trade was initiated right through this window here, because this was basically the market saying, oh, phew, it looks like the Fed's done raising interest rates. So I'm a little bit leery about blaming this whole rally in the crypto market, specifically on the Grayscale ETF news. I think, especially crypto people kind of live in a bit of a bubble, and they don't connect the dots with the rest of the risk markets. I personally, because I look at the whole damn market all in unison, I literally saw this event all happen instantly at exactly the same time. And, tragically, like I said, I don't think that actually the fundamentals in crypto really changed a hell of a lot. And as soon as that relief rally was done, basically the sellers came right back out. And it's interesting how the sellers came right back out at exactly the technical place where they're supposed to come back out. 38.2s, previous, projection level fail levels. I think there was also a A, B, C, D level. If we look at the daily chart, this is kind of a cool analogy. The A, B, C, D level, notice that the counter trend rally took us right into that level. You could also argue too that if you did fog and bombs off of these lows, we're supposed to expect significant resistance at things like 4.669s. And you notice that was basically a 3.5 to 1 risk reward off of buying this W. If you stepped in and bought this candle body low and just risked the tail of that range and then said, well, I'll take profits at that 4.669, that was about 3.5 to 1 risk reward. So I think that there were a lot of reasons why any guys that came in and bought off of these bottoms, that they were ringing the register here. And then, as I said, 38.2s, you should expect at any given point in time. But I pointed out for the community on Friday, which I thought was fascinating, was notice how when we did rally up into this level, the next stop here should be 877. So you could make the argument that as these things go, right, this is a trading range there to there to there. We break out of this range, and the very first thing you should expect is 2.618. Now, we either do one of two things when it comes to the bifurcation. We either come right back down and 2.618 is rejected, and we have to come right back down to the original bottom, or sometimes we will just blow right through the 2.618 and head right up to the next fog and bomb level, 4.669. At this point, you do the same logic and you say, all right, well, we should expect to pull back to 2.618, and then we'll see what happens there. Well, sometimes we don't even do that. In this case, you can see we blew right through 4.669. And you could say, well, the next stop is 877. So right now, the debate is, are we going to stabilize at 4669 and accept 4669 and head our way up to 877? And you can see clearly the market stabbed higher. It was rejected, came back below 4669, tried to accept back above 4669, failed, and instantly we went boom, and then boom, right back down to the original bottom. And what's fascinating about this is, I don't know whether you can see this or not, too many arrows on here now. But when we M'd out here and lost this 4669, you can draw a Foggenbaum off of that. And lo and behold, we slammed right into 2.618 here. And I think that's sort of the debate that's going on right now is now, just like we had through this event, 4669 up to 877, where are we going to stop? I think now the debate is, all right, we've blown through 2.618. We are now fighting in this 2.618 to 4.669 zone. And interestingly enough, as I pointed out on the weekly charts, we've got a whole bunch of confluence of levels here against this 4669. If we go back to the daily chart, you'll notice that this, in fact, actually, you know what, before we do that, let's, since this is a valid market structure level, let's put that on all of our charts. And now let's go back to that higher time frame daily chart and let's see where that 4669 lines up. And notice I had said here, I have 5 different reasons to look for the market to come back down against this level. I've got this 1.618. That's actually called the golden ratio. And that is actually an Alt A, B, C, D. It might be difficult for you to see this. If you need to, pause the video and hit rewind and go back. But this is A to B here, right? So actually we can even label that. A to B. So there's the A to B. And this is the C to D. And we can label that C to D, which means that this is the classic sort of bot price objective. A, B, C, D. You're just classic one-to-one symmetrical move. But sometimes these alt ABCDs can be alt ABCDs, where the C to D leg can go to 1.272, which is what I think the original price objective. Notice that's a 2.618 off of this original top. But a lot of times this thing doesn't finish until it has to hit this 1.618 all the way down here. And actually there's a guy on the site who's like, I live by this shit. I would be shocked if that level wasn't traded to. As well too, you can see that we've got the 50% level of the entire bull run here. So if we do a fib from the lows all the way back up to the highs, 50% WD GAN of this entire range is sitting there at 23.5. Yeah. Oh, we got questions today? Why don't, because we have to do the raffle today, I'm going to leave the questions till tomorrow. And let's answer the questions on the Monday after party show, okay? So we still have to do the raffle, eh? So remember that. So, okay, so just finish off this thought. We also have a Foggenbaum off of that top that we just talked about. In actual fact, I hate to say it, even this was a 38.2 failure, and we said that off the 4-hour charts that was a double top breakdown, right? And we just threw the Foggenbaum study off of that double top, and it said 4669 was right there. So could we see a nice little stab against that level? Absolutely. Also, too, remember this was Mr. Fink's ETF. I want an ETF. I want an ETF. And frankly speaking, honestly, I don't actually think it's in our best interest if you are a Bitcoin purist for us to have these ETFs. I actually think that what they're going to do is just like they did with the housing market. For the longest time, housing was sacred after the Great Depression. Don't fuck with people's houses. 1990s, end of the Cold War, the banks all weasel their way back into the market. They securitize housing. 2007 happens in the United States. Look at what's happening in fucking substitute drama teacher shithead fucking Canada. That's what you get for securitizing housing, where the banks now have a vested interest in ramping up the price of housing and fucking the population over because, hey, they can make a profit off of this. What do you think is going to happen to Bitcoin when all these ETFs come out? securitizing BTS or Bitcoin. I mean, so ironically enough, if you are a Bitcoin maxi, you don't want these ETFs in here. This is like cancer. Anyway, it's Brian just barking at the wind again. Anyway, so we just made a new low. I mean, nice to see we have a nice little dead cat bounce. That's encouraging. But we've got like 5 different reasons, including probably the biggest reason possible, that this is a big, fat, round number, $25,000 even. I actually find it very surprising, to be honest with you, that we haven't traded to that level. So, I mean, you can see all the levels. If you want to draw them up on your price chart, just go look at the tweet that I put out. I draw up all the levels on these tweets. So you can, if anything, if you want to like practice your TA skill, just see if you can replicate a lot of these studies that we have I've drawn here. Because I mean, this shit works. It's the same shit, different pile over and over and over. So anyway, as you can see from this image, and I even wrote up here, I got 5 different reasons to look for this market to come back down, wherever the hell that went. Was that over here? Yeah. So recent rally. Okay, that was that one. Okay, here, seeing 5 different reasonable reasons to look for this ugly fractal. And I got to say, thanks to Mr. Fink and the ETFs and all that bullshit, they're going to make these bottoms and these tops as ugly and as untradeable as possible. Why? Because they are in the business of fucking us in the public. They are in the business of appealing to our emotions and causing us to act emotionally. So they're going to dump price really violently, and then mysteriously, based on their plan, bottoms are just going to come out of nowhere. Welcome to institutions owning markets. This is what they do. So anyway, 5 different reasons to look for market to come down into this level. I don't know how this plays out. I mean, obviously, we've had a huge drop here just over the past week. Like we said, off of that weekly chart, there's a ton of trapped bulls all up in this wick up here. If we get any kind of reprieve here, these trapped bulls are going to want release. And if anything, probably there's a few people just going, please, 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 please get the market to come back up here. And it might just happen in sort of a vacuum. Remember also too, we're in a holiday weekend environment, so they can kind of mess around with price in here. I wouldn't be surprised if sort of late today, then early tomorrow, very early, we actually get some sort of counter trend rally, and any of the institutional people that are trapped and that would like to try and get out here, they're going to give them that opportunity to get out. Fingers crossed. If anything, we got a nice little 3-bar fractal that just fired here. We could probably see it on the 4 hours. Yeah, there it is. So inside bar. I do think that we're going to run into an absolute brick wall of resistance here. And what I've said off the 4-hour chart is, we have traded to new lows. We do have a whole bunch of big technical objectives down here. And especially this 4669 here. Notice, remember my conversation there just a moment ago about 4669s and 2.618s and how we sort of stair step our way from one fog and bomb level to another. If we do find that within this zone, 4669, 2.618, we actually do go in W, well, then that'll be a good sign. That'll mean we'll probably rally back up here. But as I had sort of pointed out there a moment ago, I can't, if they just spike this thing straight up like that, I cannot consider that a buy signal. If this really is bullish and we are bottoming, then what we need to see is for this thing to rally back up and back down on the other side of this trend line, and please put in a nice W. That's what's going to get me to be bullish right here. Right now, this is nothing more than just a dead cat bounce. And probably a really good analogy. Let's see if you guys have been listening to me. I'll finish off this. what do you think is the number one technical objective we should have looking at this price range right here, that you should expect this at any given point in time? It's just what the market does on a regular basis. I've already mentioned it once. Excellent, Zonks. Yeah, excellent job. Good to hear that somebody's listening to me. So where is that 38.2? Oh, what a surprise. It is literally going to be a rally right back to this trend line. Hopefully that makes sense. I think that's pretty straightforward. So maybe if we're lucky, through the rest of today, it is a holiday. You might even argue that this kind of looks like an inverted head and shoulders, eh? So if we're lucky, maybe we go down, up, down, new lows, back to our neckline. We'd like that to be a little bit higher. The more horizontal it is, the better. Consolidation, then breakout, and this will give you a measured move, right? So the bottom of the head, back to the neckline. Come on, you. No, you're not going to work around. Right to there, then clone that. That will take us up there. Now, I do kind of like this where you could get a spike straight up into these levels. Notice that this inverted head and shoulders, that would take us back, basically back to the original structural level. Also, too, notice, look how the profile is basically empty in here. So you can clearly see, and this is what we call the POC, or the point of control. So you can see that if we do accept back above the POC here, and in essence, the market is putting in structure saying, I don't want to be down here. I'm putting in W's. I'm bullish. You can see it's going to be a straight line shot straight up to the next volume profile node, which was this battle zone up here. There's value high. So I could very easily see that there could be a nice counter trend rally here. The problem is if they take it straight up like that, I can't consider that a buy. I have to wait for some sort of consolidation to give us a reason to be bullish. Right now, this is nothing more than just a dead cat bounce. So anyway, let's hope that carries on. Then what I'm worried about is, because this is a holiday environment here tomorrow, right? Tomorrow, Labor Day weekend holiday. The only people that are going to be at their desks are going to be the banksters. And of course, they're fucking around with the market. And we often see that Bitcoin and cryptocurrency prices get really messed around with through these holiday environments. So I'd almost suggest that literally 24 hours from now, we should all then pull up our price charts, getting ready for what is the post-holiday week setting itself up to look like. And then as soon as Asia opens up that Tuesday morning, that'll be late Monday afternoon for me, probably Monday evening for people like Chris on the East Coast. That's when we're actually going to get the real message of what should happen here going forward. All right, so I don't know whether that helps you with sort of what the hell the Beamish is thinking with regard to crypto and Bitcoin. I'm actually pretty sanguine of price right now, the fact that we did break to new lows. Having said that, I think we're still in a consolidation environment, but we're just hanging on by a thread here. If we lose Mr. Peter Fink's I want a Bitcoin ETF lows, then look left. You can see our next support line is comfortably within, actually, ironically enough, the area where I could justify actually investing in Bitcoins. So in a weird sort of way, I would actually prefer that they just rip the Band-Aid off, get price back down against these lows, and then we can actually start talking about, keep in mind, we've got the halvening event coming up here in 6 months. And what I've publicly said here to everybody is, if you're a bull, that's awesome. I mean, based on the fact that I think they're going to do a repeat of this whole sickness bullshit, they're going to lock us in our cages again. They're going to try and make sure Trump doesn't win this next election, which I think well, anyway, we'll see what happens. Which means that they're going to do another big whack of money printing while we're stuck in our cages, which means more dilution of the currency, which means perfect justification for Bitcoin to go to $100,000, $200,000, $300,000. I mean, what's beautiful is that this shit writes itself. Now, with that understanding, look at it's kind of like we're debating as to Bitcoin's future where my mouse is. I don't know whether you guys can see my mouse over on YouTube. And we're kind of like humming and hawing. Okay, well, yes, it's a bear. There's M tops and watch out for the dumps and you might get wrecked. But look at what a year or two from now could look like. So, if you are interested in the crypto story, if you are a bull, basically this is what I've said. For those people that are shrewd and that are patient and that are waiting patiently for these cycles to play out, you've waited years, because this is now a couple fucking years we've been sitting here doing nothing, just waiting. Well, your patience is now finally going to pay off. Now, my hunch is we look more like this. But I did see there are some people that are kind of like, well, we're not going to get another one of these COVID fuck yous. Really? You really think that's the case? I thought it was interesting. Somebody here says, are you really going to think they're going to do another one of these COVID? Look what's fucking coming down the pike from these assholes. So and you can't even believe these dickheads. I mean, I couldn't believe it. Joe Rogan was pointing out on one of his broadcasts that as soon as somebody mentioned Taiwan with these like World Health Organization shit and stuff, as soon as they mentioned the word Taiwan, the guy at the World Health Organization, he actually hung up from the call about, what's going on at the WEF and all that shit. So clearly we can't even believe what these assholes are telling us. But look at what the message they're trying to ram down our throat is. Oh, what a surprise. So don't be shocked if another one of these big fuck yous is coming down the pike. Remember? All right. But what I need for you to understand is that they do these FUs to get you and the public freaking out and selling. And you will be selling into the lows. And if you freaked out through that last COVID event, remember there was some guy in Washington who actually came out through this and said, I will sacrifice my life to save capitalism. If you hear any of that kind of talk, then they've got the herd panicking. And the herd, like lemmings, is all jumping off the cliff together. That's your warning sign that, hey, maybe I'm not going to be a lemming and I should do the exact opposite. And I had the privilege, I worked with one guy who actually had the balls to step up and buy Bitcoin right through here last cycle. Do you want to be that guy? There's nothing wrong with that. Now, I did say that, I did get quite a bit of pushback on this. So I said, okay, well, maybe it's going to be, and geez, look at all this crap. And why is Alan doing this? Discover more. I don't want to see this shit. I'm here looking at my tweet. Why are you doing that? See, this kind of stuff, he's trying to goad you into clickbaity. He's trying to get you to click on other people's shit. And that's just wrong. But anyway, I mean, maybe this cycle turns out to look like this. But regardless, just try and understand. The reason why I don't think that this is this cycle is because notice that in August, September of that particular cycle low, 1516, we were right down at the lows. So if they want to knock Bitcoin down here in the short term and just do this like quick, rip the Band-Aid off and knock it back down into this reload zone, bang, 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 just get it done in the next couple weeks, then okay, all right, I think we got a case for a 15-16 low. So, either way, I don't really care. You want to knock this thing right back down against these lows now and rip the Band-Aid off now and then give us that fucking killer buy signal through this fall? Awesome. Love it. Bring it. And then that sets up this. But the point here is, look at what happened on the other side of the happening. Do we really want to get too wrapped up in all of the shenanigans that are going on here in the short term? So just try and keep this whole thing in perspective. We've waited, all of you people that were shrewd and did not get sucked into, hey, technical analysis doesn't matter, just buy and you'll get rich. And you're like, you know what? I'm not going to chase. That Beamish guy says don't chase, just cool your jets. Well, all of that waiting is now coming to a head. This next 6 months is your window. So I want you focused, build your name, your list of names that you want to be invested for the coming bull. It's getting ready. And, as a final thought, I thought it was fascinating that Colin dug this up because it's so perfect. We actually talked about this, that this is the part of the market. This is the washing machine. And you don't want to get washed out of the market through the washing machine, right? Brian calls it the washing machine. Don't get washed out of the market. Stay focused. Understand that Chappelle is not working for you. He's working for his bankster crooks. He will get you to panic. He will get you to dump. He will get you to freak out into these lows. But you have to understand this, especially when we get down into cost of production levels. If we're really lucky, they dip it all the way down into those levels. That's a buying opportunity. That's when you have to step up and cast off the herd mentality and start taking personal ownership for your behavior in the marketplace. You got to buy when others are crying, and you got to sell when others are yelling. Okay, rant over. Now, I got a couple minutes left. Every term, we have the privilege of actually teaching somebody this process for free. I have been encouraging everybody, take this opportunity. If you can, our Tuesday club, Stock Pickers Club host, David, won our first contest, and it's a privilege still working with him almost 10 years later, and he's an absolute boss stock trader. It can happen to any of you. I still think, and I've told you this repeatedly, the amount of money that we charge for this course program, $1,000, it's actually laughable how cheap it is to actually learn this process. I guess we don't have the prices on this one. But anyway, the point here is right now, it's raffle time. So told a whole bunch of you to join the raffle. It looks like you did. Oh, poor old Paul. That was the last time when I clicked on this. I can't do that now. My apologies there. So we are going to start this spin, and I don't know, maybe if Paul's really lucky, we will land on him again. Looks like a bunch of you listened to me, so that's good. So let's go and see if we can change somebody's life for the better. I love this raffle. I love the wheel. I love the karma. I love the PMA. Remember, my number one job is to, try and make a positive difference in this world. And I hope you guys got a few little learning tips out of today's broadcast. Andrew, can you do me a favor and post that question in the DB request room on the site? Because I know you are a site member. I'm going to do the Q&A session tomorrow in the Daily Brief after party, okay? Can you just maybe just type me an okay there, just so that I know you heard my request there? Because it's a good question, but we just don't have enough time. I got to get out of here for Liam here soon. So with that said, whose life are we going to try and change for the better here today? Are we ready? 3, hit the like button. 2, subscribe. 1, hang the notifications. Give Brian some credit for giving shit away for free here in this world, trying to make a positive difference. Here we go. 3, 2, 1. Boom. Whose life are we going to change? Joshua! Woohoo! Let's take a screenshot of that. Joshua is our big winner. Way to go, Joshua. You have 48 hours to call in and claim your prize. And no, we are not giving away a 3-ton elephant. Anybody who knows that reference is a 90s person, I suppose. We will post it, I guess, in the members lounge. Congrats, Joshua. Actually, I don't know whether he'd be a member though. Maybe he's a regular site member, who knows. If somebody knows Joshua, and actually I think I spelled that right. Somebody knows, we'll also post it here in the room. Oh no, we can't do that. Let's go like so and like so. And Chris, maybe you can post this link in the description of the video. If Joshua, if that's you, there is the link to the screenshot. And Chris, if you could throw that into our description of the video with the winner is this link, or even I don't know. I don't think you can put an image in the link, can you? I don't know. Anyway, Joshua, reach out to us. Let's get you hooked up for the level 1 program. Congratulations. Way to go. Woohoo, party. Woohoo. And on that note, I think the only thing left for you good people is could you all give Liam and I a nice little positive karmic wish for this afternoon, and wish Brian good luck in his real job. And I hope you all enjoyed the broadcast. Aside from all the ranting, I hope you got a couple good TA tips. I think I gave you about 3 or 4 really good TA tips there. If you paid attention, if you were taking notes and you had your journal out, hopefully you learned something here today. All right. Have yourselves a great day, everybody. PMA for the win. Congratulations, Joshua. Let's all, collectively try and go out and just be good role models for people in the world, including ship captains. Now that you're part of our community, you have a responsibility. Slow and steady wins a race. Remember what your number 1 job is as a trader, and wish me luck on the road with Lily here today. Have yourselves a great day. All the best, and bye for now, folks.